The first legislative win for the crypto industry, the Genius Act passing in the Senate earlier this week, the bill establishing a federal framework for stablecoins, and now going to face a vote in the House. Joining us right now is Paolo Ardoino. He's the CEO of blockchain platform Tether. Good morning to you. A big move in terms of the sort of next stage of where you think stablecoins go, but there does seem to be some kind of fight taking place in the House over all of this. How involved are you in those negotiations?
Well, first of all, good morning, and thank you for having me. Well, as Tether, we are very grateful to see the Senate having passed the Genius Act. We think that is a great step forward towards a very strong, solid bill for regulating a technology that Tether created in 2014. We are aware of the House interested to combine the Market Structure Bill and the Genius Act. We at this point we are sitting and watching. We want to be helpful. We want to provide a contribution with thoughts and explain how stablecoins are very important for all the emerging markets, developing countries that are the countries where we operate for the most. But I think that the different concerns of the House will be solved. I saw the tweet from Donald Trump, the president, suggesting that the Genius Act should move fast, and we would just like to see that as a closure for this long process that lasted many years.
Circle just went public literally about a week and a half ago. It's been just on the move, a bit of a rocket. Maybe it's because it's really the only public stablecoin out there right now. How do you see that industry developing over time? Will there be hundreds, thousands of these things, one or two of them? How does it work?
Well, I think that there are two point of views, right? So I think that in two big markets. One is the foreign market for stablecoins, i.e. all the emerging markets in developing countries. So those countries that want desperately to have access to the US dollar in the form of USDT or like a US dollar-based stablecoin, those markets have 50% inflation year over year. Think about Turkey or Argentina and similar. And so for those markets, stablecoins are very important, but also are very lucrative for the companies that are running and building these stablecoins, because you don't have to give back the 4% or 5% interest that you make on the reserves in treasuries that you hold as a stablecoin issuer, because the intraday volatility of those national currencies, the Turkish lira, the Argentinian peso, is more than 4% in a day, right? So 4% in a year that you could give back is not that much. So this population are really caring about having a solid, strong product that will preserve their wealth and help their families through these difficult times with, against the devaluation of their national currencies. In the US, I see a huge competition with probably tens or hundreds potentially of stablecoins, all fighting each other, and will basically be a race to the bottom for the profitability of these stablecoins in very high efficient markets like the United States.
Paolo, for an investor, for anyone really to be all in, it'd be nice to know that if it's dollar-backed, it really is dollar-backed. So that would be an independent audit, and I know that you've talked about this before, and third-party attestation reports are one thing. Are you in talks? Where does that stand, engaging with the Big Four to do an actual independent audit of everything?
So the previous administration of the United States made it very difficult. Senator Warren sent letters to the auditors basically suggesting that they should not touch crypto companies. And the OCC was very against crypto companies. Banks were not banking crypto companies. And the one that they banked crypto companies were basically almost killed. Think about Silvergate Ventures, Silicon Valley Bank, and so on. So now with the new administration, we had already started successful discussions with different auditors that are interested to potentially audit Tether. And so that was not possible, would not be possible without the change of administration and the change of direction.
So it's more than one-to-one at this point? What are you saying it is in terms of being backed by the dollar?
So USDT reserves are 104% collateralized. So we have around $6 billion more than the $155 billion in reserves that we need to hold as 100% of reserves of our stablecoin. Our market cap is $155 billion. So we keep $6 billion in excess equity within the stablecoin reserves. And on top of that, our company, our group, has another $15 billion that we keep in the company. So in total, the group equity is $20 billion more than the total market cap of USDT. Tether distributed less than 5% to its shareholders. We keep all the profits, well, the vast majority of the profits, 95% of the profits within the company, first of all, to further the stability of our products, as well as prove that there is a difference between us and traditional banking that does fractional reserves up to 90%.
Mostly treasuries? And are you a person that would say that it's a real factor in supporting the U.S. Treasury market?
Well, Tether in 2024 was the 5th largest purchaser of U.S. Treasuries. And if we were a country, right? I mean, we compare ourselves to countries now. And in overall, as an overall statistic, Tether is the 18th largest holder of U.S. Treasuries. We have around $125 billion in U.S. Treasuries. We are acquiring that portion of our reserves is increasing. You can check the latest attestations. Historically, it has been increasing. And we think is the right way, is the right trajectory, is also in line with the Genius Act. So we are very excited to see, a stablecoin bill that provides clear guidance on that.
I got a different question. We always talk about just the dollar. And this goes to maybe the Treasury issue, but just the dollar, the primacy of the dollar. And there are folks in this White House who talk about how they love crypto, but they also love the dollar. Do you think that ultimately when it's Bitcoin or crypto more broadly is ultimately going to have a benefit to the dollar long term or undermines the dollar? And given that I don't think you're an American, you may not have a stake in this argument.
Well, I have a stake in the interest of stability for all the emerging markets where we operate, right? So definitely I know that there are concerns on the increase of debt of the United States, but think about the fact that the United States are by far still the safest country when it comes to, their national currency and your national currency, right? So if you compare, everything is relative in life. Think about Argentina, think about Brazil or Turkey and Vietnam and so on, and Nigeria. So by far, the US dollar is the safest fiat currency in the world. And I think that stable coins that were born through crypto are the living proof that actually a combination between Bitcoin, I would not say crypto in general. I love Bitcoin. I think that Bitcoin is completely different than crypto and the rest of crypto. So between Bitcoin and stable coins, they will make America stronger. And that, I think, is the main point of this administration. With stablecoins, we are bringing the US dollar to 420 million people around emerging markets, developing countries, and at an unprecedented pace. We grow by 30 million new wallets per quarter. We are the biggest factor in the expansion of the US dollar hegemony. So that is something very important, apart from buying back the US Treasury. And by the way, Tether invested in the last 3 years back around $5 billion in the US. So we are, I think, one of the biggest promoters of the United States and the United States dollar. Plus, on top of that, we use Bitcoin as a way to create a stronger savings account for and explain how that could be beneficial also for Americans. In the end, it's like Bitcoin is the new gold and is understood by people as an edge. I'm not saying that you should have 100% of your portfolio maybe in Bitcoin, but definitely is a good option to have in your portfolio.